Accounting equation and Excel. Populate invoice using billable item that was created from a purchase order, otherwise known as a PO form. Get ready and some coffee because we're about to learn the accounting foundation, the accounting equation using Excel. First, a word from our sponsor. Yeah, actually, we're sponsoring ourselves on this one because apparently the merchandisers, they don't want to be seen with us. But that's okay, whatever, because our merchandise is better than their stupid stuff anyways. Like our Trust Me, I'm an accountant product line. Yeah, it's paramount that you let people know that you're an accountant, because apparently we're among the only ones equipped with the number crunching skills to answer society's current deep, complex, and nuanced questions. If you would like a commercial-free experience, consider subscribing to our website at accountinginstruction.com or accountinginstruction.thinkific.com. We are in Excel. If you don't have access to this workbook, that's okay, because we basically built this from a blank worksheet but started in a prior presentation. So if you want to build this entire worksheet from a blank sheet, you may want to begin back there, or just build your own worksheet as we go, or possibly just follow along with good old paper and pencil. If you do have access to this workbook though, 4 tabs down below: example, month 1, practice, month 2. The example tab, in essence, the answer key, the month 1 tab being the prior month of operations, the practice tab having pre-formatted cells so you could practice the practice problem with less Excel formatting. The month 2 tab, the current month we will be working in, where we started out with a blank worksheet but are now basically working within a template. However, we will be adding to that template as needed as we go, practicing our Excel tools and formatting when we do so. Let's go to the example tab to get an idea of what we will be doing. We're recording transactions using an accounting equation, which is basically acting as our trial balance from which we will construct our major financial statement reports, that being the balance sheet, income statement, statement of equity, income statement, sometimes called the profit and loss report. So now we're going to record a transaction for the sale of inventory on account. We want to tell a specific story about this inventory item, thinking about how we would record it using debits and credits with the subledgers, and how you might add to that in a 3-dimensional, I'll call this like a 2-dimensional worksheet, versus a database like a QuickBooks or any other kind of accounting software, a Xero, for example. What added layers of connections could we have on top of the double entry accounting system? So here's the story. We basically are imagining that this client, New Music Stuff, came into our shop and said, hey, I would like a Squier guitar or 20 Squier guitars. And we said, oh, we don't usually deal with Squier because our vendors are usually Epiphone and who else do we have? Gibson. But we're willing to contact Squier. We think we could do that. Therefore, we get the request from the customer and then we turn around and contact the new vendor. Now, as we do so, if we don't have much power in the situation, much control, we might have to buy the guitars when we request them, in which case we would record the inventory at that time, similar to us buying something online when we pay for it at the point of time we request it, even though they haven't shipped it to us. And if you live somewhere like where I live, you've got only about, I don't know, like a 30% chance the pirates don't steal it before it even gets here, for crying out loud, right? So, but if you have a little bit more control over the situation, you might be able to say, I would like to send a purchase order, which is a request for the inventory, and then have them ship over the inventory once we receive it. Then we can basically check it and see, and then pay for it at that point in time. So that purchase order then is just simply a request form that doesn't record something from the double entry accounting system, but gives that added level of value in a database program, because I could create reports that are going to show the open purchase orders that have not been filled, even though there's no financial transaction. There's no general ledger account that supports it. Now, I could kind of build that out in Excel. I probably should have done that, but I'm going to imagine that's the added thing that you could do in a database program, is really sort those purchase orders. Then on the purchase order, we put the customer on it. Why did we do that? We could do that in a QuickBooks system or a Xero system, not because the vendor needs that information, but because the forms themselves can be connected to each other, so that when I actually get the bill, I can create the bill from the purchase order, which is what we did last time. We imagined the actual guitars come in and we haven't yet paid for them. We haven't entered them into the system. We just have a request form of the purchase order. We can then take that purchase order request form that doesn't have a financial statement recorded from it, if it was a database program, and create the bill from it, which is going to increase accounts payable and record the inventory. On that bill form, I might be able to pull in the customer into the bill form. Doesn't need to be there for the bill form, right? Because it's a customer. On the bill form, we need the vendor. But by pulling it into the bill form, we might call it a billable item, which you have to be very careful of in systems like a QuickBooks or a Xero, because inventory is a little bit different the way it acts than other billable items. That's where we are at now. And now we're going to imagine that we're going to turn around and create an invoice from the billable item that we imagine that we created from the form. Now, again, in our system, all we can do is record the journal entry, but in QuickBooks, you can imagine the forms would be linked together. I can basically create the invoice directly from the bill reminding me that I purchased the inventory from the purchase order directly for a specific customer, so that once I get the inventory, I can turn around and invoice that customer. Okay, so one other thing I just want to keep in mind as we go through this, we've talked about this idea of billable items before having a particular problem, which is elevated when we go to inventory. That problem being, when we saw before, we looked at like supplies expense. If, for example, you buy supplies, you're going to consume the supplies in a job or something that's going to be specific for a particular client. Some software, such as QuickBooks, will then have an option for us in the bill or check form that we create, which would make the office supplies expense, to make it, quote, billable, end quote. Billable means basically invoiceable, right? You would think the more proper term in software language would be invoiceable, because that's the form that we're going to invoice the client. But in normal parlance, we usually say we're going to bill the client, right? But the data input form we're saying is, look, I'm going to make it billable, meaning I'm going to put the customer into the bill form, and then I'm going to bill the customer with an invoice form driven from that billable item. Now that's great, but the problem is, as we saw, that when we pull it into the invoice, there's no, quote, item. The items are the things in like a QuickBooks or Xero that tells the system whether or not there's inventory related to it and what account it should go to. So if you're just billing for office supplies, then you don't have the problem of the inventory having a different cost from the purchase price. But you still have the problem of which income account should it go to. By default, the system's just going to make up another income account called billable income or something like that, right? So that's not bad, but that's okay. But with inventory, we have more of a problem, because with inventory, there's a cost side of the inventory. There's how much we're going to sell the inventory for, how much we bought the inventory, and there's a subledger. So when I say something's billable and I don't have the item in it, which is usually the thing that drives those items, we have to double check those three things that are populating properly. Because normally if I pull it into the billable item, it should be pulling over not the cost of the inventory, but rather the sales price of the inventory, and it should be able to link to the subsidiary ledger tracking the inventory by unit, not just by price. So those are the things that we need to watch out for if we're in a QuickBooks system and we're using this linking process. And here we're just going to do the standard journal entry to see it in terms of the journal entry and the database. Okay, let's go to the month 2 tab over here. So we're going to say this is going to be on 2/24. So we're going to say we record of inventory on account. So record invoice. Let's say invoice for inventory on account. So these are going to be the SQ Squire 20, and this is going to be for customer new music stuff. And the cost of these are $244. Now you'll recall if you saw the prior presentation that we put these on the books. We bought the 20 of them specifically for this particular customer, and then we imagine that we now have the inventory, and now we're creating the invoice for it. So there's going to be two sides of the transaction. The sales half of it, and then the inventory and cost of goods sold half is what most people, I think of the transaction as. So let's go to the accounts receivable. It's going to be the sales price. This is not the cost of the inventory, sales price of the inventory. Now, remember that if I was populating the invoice, only the sales price would be on it, similar to if you're checking something out at the grocery store. You only see the sales and the units that you're selling, but it will be also calculating the cost of goods sold and the inventory. The invoice itself that we will create would be the same if we created it basically from scratch, or if we linked together the purchase order to the bill to the invoice, hopefully. Just remember that if I linked the purchase order to the bill, made the billable item billable or invoiceable, meaning I'm going to use that to create the invoice, we have to be careful that the system is picking up the sales price, not the cost. Because when I actually entered the bill, I entered it at cost, not the sales price. So that's the thing with which QuickBooks Online still is a little quirky with that one. It's kind of funny because the desktop version actually, I think, did that better than the online version. And I think Xero is actually pretty good at that right now. But that's the thing to keep in mind. All right. So we're going to take that times 20. We're going to then have the sales tax, which is 5%. We're going to imagine. So I'm going to multiply it times 1.05, 100% plus 5%, 105%, or 1.05 in decimal format. That's going to be meaning that we need to collect $5,124 for the sales plus the sales tax that we have to pay to the government. So we're going to then say on the sales side of things, it's going to be equal to the 244 times 20, not including sales tax. So just the sales price times the units. And then the sales tax payable is going to be equal to the 244 times 20 times 0.05. So let me show you that. That's going to be the sales price times the units times 5%, 0.05 in decimal format. Before we do the inventory half of the transaction, let's put zeros across the board so everything lines up. And then we're going to have to enter this into our subledger for the receivable. Let's do that. So this was music stuff store. Is that who it was? Let me just check this. This was new music stuff. I don't think we have that yet. So we don't have a new music stuff. So let's add a column. I'm going to hit the AV column, right click and insert. And we're going to call this music. Now I forgot the name again. Let me copy it. New music stuff so I don't get it messed up. We'll copy that and we'll just paste it, boom, right there. All right, and then so that means, so the invoice is going up. Is that centered? Yeah, I guess it is. So I'm a little, all right. This is gonna be equal to then what increased the accounts receivable, the 5124. All right. And so let's copy down our totals, but I need to make sure that I'm adding that last bit in there. So we don't have anything here yet. So it's going to be equal to the one above it plus the sum of these. That's going to be my running balance. And I'm just going to run it down. I was running because that's what Gen A told me to do. I was just doing what you told me to, Gen A. And that's going to be 19,811. Let's see if that matches what's in the general ledger. General ledger, if I add these two up, 19,811. That is good. All right, so now let's do let's go and do the subledger first. So what I'm going to do is I'm going to go to the View tab. I'm going to unfreeze the panes. Now it hurts. The pane is unfrozen. That's okay. Deal with it. Deal with the pane for a second. The unfrozen pane. And then I'm going to put my cursor right here. And then we're going to go to the Home View tab and split the pane. So this is on the bottom corner. Then I'm going to go up to the top corner and go to my subledger. All the way to the right. All the way to the right. So we had this one way over here and down. So the squire. So we're going to say now we're going to sell these. We're just going to turn around and sell them. We just bought them. We bought them specifically for this customer. We're going to sell all 20 of them at the cost now, which is 168, not the sales price, 244. So it's going to be 20 times 168. Let's pull that into the outer column for the ending inventory. 20, 168. Multiplying those together, putting an underline under it. So we go to the Home tab, Font Group, Underline. That means summing this up. We don't have any units remaining after this. They would be costing 168 if we did. 0 times 168 is 0. 0 remaining. All right, let's unfreeze the panes again, or unsplit. View tab, split, scroll into the right, and then I'll freeze the pane. Freeze the pane. The pane is hurt. It's throbbing. It's throbbing. Freeze the pane. Okay. It's a little better. It's a little better. Put the eyes on it. I'm going to say, all right. So then we're going to say that this is going to be inventory is going to be equal to negative 20 units times the cost, which I'm going to say times and go up to that subledger and pick up the cost. I'm going to go all the way up, just using my arrow keys, and I'm scrolling all the way to the right, all the way to the right, all the way to the right. And then we're picking up that 168, which should give us the 3360, which it do that. All right, it do it. All right, so then we're going to say in the cost of goods sold, also picking up that number. So that means the impact on net income is the sales price 4880 minus 3360 brings it up net income by 1520. Let's put some underline across the board. Underline across the board. Across the board. In Home tab, underline. And then I'm gonna underline these two, because I don't like the underline on the signs. Underline that. That doesn't look good. And then we're going to say, let's bring down the balance. I'll just select all three of these and just copy that down. Does it do what we think it should? We're still in balance. That's a good sign. All right, now let's bring down the ending balance. So I'm going to sum it up equals the SUM. Sum it up, prior balance plus the current activity. Right click and copy. We're going to paste that all the way across, but paste it just the formula. Right click just the formula so you don't mess up my color coding. And then I have to copy this down so it doesn't do it there, because I don't want to mess that up, and that needs to not be that way either. Okay, so then we can copy this down to get our balance, copying down the balance, boom, underlines, holding down control for non-adjacent cells, bam. So there's our transaction. Another invoice has been recorded. Let's double check our subledger for inventory. So it should be at the 6266. This is really confusing me because it was a 9266 and now you've got a 6266, like the nines and the sixes. There's all right. Focus, focus, stay focused. I can see it. I see what's happening. Let's go to the top. Let's go to our sub ledger over here. And I'm going to double click on this one and just fix our ending balance. Put the cursor back down to we need to go to where it should be. So now I'm going to go back on over to the last transaction and just give our proper check number. It should be 0 once we check it off. It's 6266. It's not 9626. It's not 266. 6266. All right, so that's going to be 0. So we're back in balance. Our sub ledger here, adding up all of the ending balance here, ties out to our GL. That's a good sign. That's a good sign. And if I look at my income statement thus far over here, income statement side of things, we've got then the revenue minus the expenses here for the current month, adding to 2000, what is that, 36. And then if I hold down control and add up the top bit right here, then the total for the year to date, I believe, if I got that right, is 9,462 for 2 months of activity. Remembering that we can run the report in like a QuickBooks software, month by month, year by year, month minus the other month, comparing 2 months or quarter to quarter, and so on and so forth. In a two-dimensional system, however, we have to determine when we're going to close out the system into the balance sheet. But I figured out this nice way that we can still kind of see the 2 months or 1 month at a time, which I thought, again, I just want to point that out because I think that's a pretty well crafted piece of work there. Let's go. I'm going to go to the view tab up top and unfreeze for a second. Don't unfreeze it. Ow! Ow! But I want to freeze it right here. Put the ice back on it. Okay. Oh. All right. So that's where we are now.